and hello everyone. Thank you for joining us this morning. So Global Atomic, as David mentioned, we've broken ground now on our high-grade Dasa uranium project, and we'll just flip through these slides quickly to give everybody an update on where we're at. So the company, a little bit of a different business model. We've got two divisions, one zinc and one uranium. The zinc division has a producing asset in Iskenderun, Turkey, which provides us with cash flow that we've used to actually advance our uranium projects without diluting shareholders. So zinc price now, like other commodities, is $1.70 plus, and uranium now this morning is around $50. So things have really moved here in the last couple of weeks. Our project in Niger, we've actually got 4 uranium deposits there. Our real flagship is the Dasa project, and that's located between two major centers, Agadez and Arlit, in the Timmersoy Basin of Niger. So Timmersoy is the equivalent to the Athabasca Basin in Canada. That's where all the uranium deposits are found. And it's been the source of production that supplied France with about 30% of their uranium supply over the last 50 years from 2 mines operated by the French company Orano Mining, the mines being Somaire and Cominac. Then you have the Matahuela deposit that's currently controlled by Goviax. And then you move down on this map. Imuraran is another big project under development by Orano. And then you've got our project, Dasa, Isakanen, and then down to the southwest, you've got our Tanigaran projects. So very good infrastructure in this area. We're right on the main highway, access to power as well through the grid, and water availability. One thing I'll mention is the Cominac mine shut down last March, and so the labor force from there is now available to come onto our project right away, and we've actually begun going through resumes. We've actually hired a couple of key people from Cominac that are currently on our team, and we're building up the team because the mining is already starting. This is a longitudinal section of our Dasa deposit. It's a 250 million pound deposit currently outlined by drilling of about 170,000 meters of drilling has been completed on this project. We've done 2 PEAs and we've just completed a bankable feasibility study. And what we've done is we've broken the project into phases. So our NPVs currently are based on only this red box that you see here called phase 1. So this is an area we call the flank zone, and we're going to start mining that at 1,000 tons per day, ramp access underground. It's similar to the Cominac model. And then once that is mined, we will move seamlessly into phase 2 and eventually mine the open pit material on surface in phase 3. So this, again, very large. It's a 50-year mine life we expect on this project. This first phase is about 12 years. So this is what we're doing now. If you can see where all the blue is, right there on the left of the picture, you can see the mine workings there. That's the flank zone. That's the phase 1 area. And right now we're doing a lot of drilling in that big yellow area just to the right of the phase 1. That's an area we call zone 3. So that one, we put out a press release the other day on some very good drill results we've managed to get there. And we want to basically turn a lot of those inferred resources into measured and indicated. And then we can pull them into a new updated mine plan at the end of the year, which we think will go ahead again in reducing our overall OPEX on the project. This is a grade tonnage report. You can see varying cutoff grades. In Africa, typically big African projects use 100 or 200 ppm cutoff grades. You can see at those levels of cutoff, we are at the 250 million pound size. What we've done, based on the fact that uranium markets hadn't really moved for many years, we used $35 as our base case price for our PEA and currently our bankable feasibility study. So we used a very conservative model, and to achieve good economics at that price, we used a 2000 ppm cutoff. You can see here at 2500 ppm, we've got over 100 million pounds running at about 0.75%, about 7,000 ppm. And depending on what the uranium price is, and of course it's been moving solidly forward over the last while, but this deposit is very robust. We can tailor the cutoff grades to suit the economic conditions. And right now you could even do a 10,000 ppm cutoff and you'd be mining about 2% uranium in this deposit. So the phase 1 project that we're talking about, that red box, is a 12-year life, doing about 45 million pounds, and the grade is about 5,100 ppm, so about 0.5%. That gives you an after-tax NPV of 157 million and an IRR of 22.7 million, with an all-in sustaining cost of about $22 a pound. This project is just over $200 million, and we'll get into a little bit on how this is shaping up as we go forward. This is a sensitivity sheet here, and you can see at $50 a pound where the price currently sits, that phase 1 area. So again, the starter mine is showing an NPV after tax at an 8% discount of 468 million and an IRR of 44.6 million. So really the way you can look at this thing is that this is of course about 20% of the overall deposit. We feel that the economics are going to look similar throughout the deposit because of the consistency of the grades. And we feel that realistically, the overall NPV of this project is going to be 5 times what you see here for this initial mining project. Next one. You see here phase 1 with the production profile currently, and then of course mining and running seamlessly into phase 2. We targeted 1,000 tons per day in this project because it kept the capex low and it kept our production profile at about 4.5 million pounds a year of production. We felt that was a good spot to really start producing as a new developer, not being too big. This is a production that we feel we can sell into the market. And of course, things have improved since we've been moving ahead with this project in the markets, and we're getting a lot of inbounds from utilities now that are very interested in supporting our development. Next. We will skip through this fairly quickly, but in 2017, a couple of key things. We signed an MOU with Orano Mining. The idea being, if uranium prices stayed low, that we could actually then just finance the mine and not build the plant right away, and actually ship material from the mine up to Orano's operation at Sommer. So this development is still ongoing. We're in the finer strokes now of the agreement to ship, and this is limited to only our development ore. About 500,000 tons we expect to ship to them at about 100,000 tons a year over 5 years. This will provide us with early on cash flow, which can then go ahead and help us finance our own plant. We also merged with our zinc operation in 2017, and that did 2 things. One, it gave us cash flow from that operation, which allowed us to develop the Dasa project without diluting shareholders, but it also took all of the global shareholders and gave them liquidity because the zinc operation was in a public company at the time called Silvermet. So we use that cash flow, of course, to discover and develop the flank zone that we're currently mining in our phase one. We published our PEA. We received our mining permit at the end of 2020. 2021 received our environmental permit. So this is a fully permitted operation now going into production phase. We also engaged with HCF International Advisors in London. We've now shortlisted 3 banks that are doing due diligence with the idea of providing financing for the plant. So things are moving ahead very, very well here. So we'll complete doing that on the project financing this year. And of course, collaring the portal. Now we're excavating that box cut. The portal should be collared in April, and we'll have ore ready for shipment by the beginning of 2023. I mentioned earlier the drilling we're doing. That will go into developing a new mine plan by the end of the year, early next year, and pulling in a lot of surrounding inferred resources, moving to measured and indicated, and integrating that into that phase one mine plan. So 2023, we continue advancing the ramp and the underground development, begin plant construction also in 2023. The idea is to commission that plant at the end of 2024 and begin commercial shipments to utilities by the beginning of 2025. Quickly on Niger, it's the 5th largest global uranium producer. Very good infrastructure, very good support of government, quick permitting timelines. We have a skilled labor force that now are available from Cominac. So we couldn't ask for a better place to mine uranium. We're basically in a desert environment. You can see in this photo, we don't have towns and villages to move. This is being ramped up now with a lot of housing coming in for our mining crew. We're big on the ESG front in the company and in the country. We've supplied food during periods of drought, medical supplies. We've been drilling water wells for local communities. And David, I see you there. So I guess our time is running short. We'll just quickly go on to zinc. And next one. This is a picture of our new plant. So we demolished the old one in 2019, built this brand new state-of-the-art facility. We produce a high-grade 70% zinc oxide concentrate. Glencore is our biggest customer. We ship from our own port facility, and it all goes to Europe to the smelter in Belgium. So very, very profitable business. And of course, at $1.70 zinc, it looks even better. Next one. I think we're done, right, Dave?
You've got another minute if you want to keep going.
Okay, this is just a little profile. We're running at about 70% capacity currently because of COVID. The steel industry backed off a bit, but now with the situation in Russia and Ukraine, the steel production in Turkey will probably go up. So we expect our plant at a full capacity of 110,000 tons a year of throughput capacity, that we would produce about 60 million pounds a year of zinc. So Befesa, we brought them in as the operator. They farmed into the project, recouped all our capital, and of course, we just have 9 months here for 2021. We had a good year in 21. We did about 11.5 million EBITDA for the year, and we expect that's going to improve as we continue to, of course, increase the throughput of the plant. Uranium supply and demand, of course, there's a looming deficit, and this chart from the World Nuclear Association shows that even with all known deposits out there, there's still not enough supply for the reactors being built. So I think we're in the right place at the right time with an excellent high-grade project. It is the largest, highest grade deposit currently under development on the African continent. So that's my story. I think the next one is a little shot on where we stack up with others. Really, this red bar that you see here also includes our zinc operations, so you could probably chop $1 off of that. So we're trading around $2 a pound in the ground for a fully permitted project now in the development stage. So a lot of these other companies on the chart are not permitted yet, and so we think we're going to be one of the first out of the gate. A lot of institutional interest over the last year. We've been obviously re-rated because we are in the development phase. We have got our mining permits, so it's been a good run, and I think it's just getting started. Excellent board, excellent management team. We've built up, all very experienced mine operators, financial people, mining engineers, geologists, so very experienced in mining and in uranium. So ladies and gentlemen, it's short time, but hopefully you got a little bit of this. So we're a fully permitted project with a mine currently under development, established solid cash flow from our zinc operation, tight share structure, and we're happy to participate in this new renaissance for nuclear energy and uranium and a no carbon environment. Thank you very much.
Great. Thank you, Stephen. We have about 2.5 minutes left for questions, and we did have a bunch come in. So maybe get to it here. You have an MOU with Orano to sell uranium, DSO essentially, as you're developing the mine. A couple of questions here. Do you have an update on the signing of that deal? And do you see this as being a long-term strategy?
Right now we're working on price. So the whole idea behind the MOU is that we would ship them rock. They would pay for the uranium held in that rock minus a fee to process it in their plant. So that's what we're negotiating at the moment, what that fee would be. We expect that we're going to have some movement on that in the next few weeks. The idea was to ship only 500,000 tons. If Orano does want to continue that for a longer period, just to keep Somer fully active for many more years, then that's something we could consider. It's not on the table right now.
Okay, so your goal really is to build the process plant as soon as possible, however.
That's correct. Yes, that gives our shareholders the best economics. And of course, then we're 100% in control of our destiny.
Mm-hmm. Okay. In the recent trade tech spotlight, you mentioned that you're looking for other ways to improve project economics, reduce financing requirements. Could you perhaps elaborate on some alternatives?
Well, the big one is, of course, the drilling we're doing right now and the updating of our mine plan, reducing the operating costs, because we think with this additional resources we're finding close to the phase 1 area, that's going to lessen the overall underground development we need to do in the first 20 years. And that will drop our cost of production down from about $18 a pound down to potentially $16 a pound. So it just makes the project much more profitable. Of course, on the financing side, we have warrants that are currently in the money. We expect that they'll be exercised, and then as a result of the Red Cloud Coremark deal we did in December, there's additional warrants next year. If they were exercised, we don't foresee any need to come back to the market for more equity. And I think we can use the cash flow from Turkey and also from potentially shipping to Orano to help finance the plant with a debt component from the banks we're currently talking to.